for the first time since Bitcoin was created, we have high interest rates. Like Bitcoin was created after 2008, when the interest, when there was a financial crisis, and the interest rates went to zero as a way to rebuild the entire financial system, redynamize the industry and everything. And Bitcoin became an interesting investment as well. When nothing pays and there's that new asset that comes, a lot of money can flow in. Now we have, after that we had different cycles. And after these cycles, we had, like every time it was time to buy Bitcoin, it was a good thing because interest rates were low, there was very little to compete. But now we have high interest rates, and it's a different thing. Like for the first time, we have very high interest rates and crypto. What do you think changes as an investor, as investors here? What do you think changes for the way you're going to work? Which type of projects we're going to invest in this landscape? Again, it's the first time we have this type of landscape. So what do you guys see?
Okay. Well, I think about the sense and solutions when it comes to credit, lending. So I think access to credit in many countries, both in the Western side and in mature economies and now in emerging economies, is becoming more and more challenging. We are seeing this with the SMEs that we are investing into startups. So perhaps solutions related to new forms of loan, lending, through Bitcoin or through crypto could be a great solution for in this landscape. So I think this current situation will definitely increase the amount of solutions coming on that side.
Well, first of all, we have to understand what high interests are. So Europe had a decade of deflation before it went to inflation, and increasing interest and having high inflation and high interest is a part of a tool that central bank uses to make money short on the market. So this works very fine in national economies, but as so far everything is centralized in this world, it doesn't work anymore. That's the reason why we need like a new exception and new financial instruments. So coming back to Bitcoin, Bitcoin is something, if you talk about Bitcoin, it's something completely different than cryptocurrencies, because Bitcoin more or less behaves like a commodity. Why? Because Bitcoin gets at the end shorter. Yeah, to what we have to understand, a currency is a part how much energy I put in something to have an output. This is the work what I do, yeah, and this is the output what I get. So Bitcoin, at the end of the day, as it gets more and more expensive to produce it, it's more like a behavior like a commodity, for example, like gold. So we can, if we talk about cryptocurrencies and inflation, it doesn't fit really to Bitcoin because Bitcoin is completely different. So if we talk about high inflation on a perspective of a VC, we have to consider that, let's say, when the interests are very low, most of the investors, they like to invest in equity products because the return of investment is higher. So now when the interests are up, then it's easier for them to go in a riskless product, like in bonds, and getting a return on. So at the moment in this market, most likely the question is, does an investor invest in bonds and take less risk, yeah, just let it run? Or he says, okay, I still want to be an entrepreneur and I want to take risk and I want to invest in startups. So that's the more or less main topic from this side. If you talk about how a higher interest rate, yeah, how does this affect the capital and the markets in which we are to fund or to raise money for the project?
Crypto VC, as a crypto investor, like what would be the thing that you see other investors doing? What are you guys doing in this market?
Well, first of all, the inflation is also an indicator of the volatility of the production and the value of the production. So if a bank takes, I don't know, 10, 17% interest rate, then of course the return on investment in a private investment is supposed to be higher, otherwise they bring the money to the bank. So how we face this, actually we do not, actually believe we are in a transition, not only of the banking, also on the VC world, yeah. So this means for us to provide different solutions, and let's say going to DeFi lending and protocols, all these kinds of things, in my opinion, it's not too far developed at the moment, as it is a real product for institutional investors. So this is a bit the main issue. What I see at the moment is that we have a kind of discrepancy between institutional investors, where still most of the money is sitting, or family offices on the one side, and the new economy on the other side. Because for investors, with traditional investors, they cannot reach anymore the percentage on their portfolio return on investments. So they don't have access to the new technologies on the market. So we're trying to solve this gap and bringing them together. You know, we're explaining, let's say, the institutional investors how the new industry works, and we're trying to explain to the startups and to the founders, especially, how the investor works, so to bring them together. And I think that's one of the main things what has to be done now, let's say in the next 1 or 2 years, because otherwise this ecosystem will get dry.
Great. Also triggered the collapse of banks. We could say that this is a good or a bad thing for our entire industry, right? Could pose the withdrawals on circles like it did, or could enable people to think maybe we have something great with crypto. Does that change the type of projects you would invest in, like the collapse of banks? Maybe you would look into, well, maybe those projects become interesting now that the banks are dying, or maybe not. Like, is this something that influences your thesis?
I mean, one sentence to this: the banks are dying not because they are maybe bad managed or something. The banks are dying because they are over-regulated, and the regulations, what has been done, has made them to all kind of system-relevant corporate, and this system just doesn't work. A bank in an original sense was taking money from people and giving to entrepreneurs. The system has been completely corrupted. This doesn't work anymore. That's the reason why the function of the banks has been changed, or they are at the moment unable to function anymore. So I would say bank topic a bit beside, has nothing to do with the interest rates on the market. But of course, let's say if the central bank prints money, gives you as a bank money, and then you cannot deploy the money to projects to generate a yield out of it, and you have to bring it back to the central bank, and you have to pay to give it to the central bank. I mean, this system doesn't work. It's just what they build up. So, but this has nothing to do with interest rates and investor behavior on it. For investor at the moment, I think it's one of the key arguments, or for the key topic, is how to store my money that it do not lose on value. Because we know that the banking system will drop down. We don't know how much. We just have seen how something happened in the US, and we immediately see how the world economic is reacting to this, and we understand also that this is just not the first case, and it will be not the last case. So for me as an investor is, okay, how do I storage my money? So, and we had this in the speech before, we can storage in Bitcoin or the other commodities, but then there's always the question about volatility, about fungibility, how I can trade it, how fast I can make it to liquid, can I pay to this? And these are, let's say, future technology solutions, what the Web3 ecosystem has to provide, and not to build a new industry, to adapt from the old industry, because these are our customer clients at the end.
That's interesting. I mean, again, a lot of what you're talking right now seems to be more about investing in assets than in projects, right? Would you say that in this context you do not invest in much project, or you're not looking for projects to try to find solutions for the landscape?
No, that's not what I'm saying. I'm just saying that you can develop, and that's unfortunately one of the topics by founder. We all know this as a VC. A lot of founders, they're coming, mostly then, let's say, CTO kind of types of founders, and they have a great product, but you cannot adapt it to the economy, so the product value is zero, even if it's the best product.